So we're group number four. And for the simulation, we decided to divide the $1 million into 6 different stocks because we thought at the beginning of the simulation we could only invest into 6 different stocks. So we came up with 2 important criteria to meet to choose these stocks. First one being risk. We didn't want to invest into such a risky portfolio to where we weren't gonna we could lose all the earnings, nor into a risk-free portfolio into which we probably weren't going to see any earnings. And then the second criteria was speculation. What do we think the economy was going to go in the next 4 months based on the shift of the industries in this economy because of coronavirus, vaccination, the new presidency, Congress being controlled by Democrats right now. So because of that, we came out with 6 stocks: Amazon, Google from the FANG, going for the technologies, Comcast International, going into 5G and an industry that's developing, United Healthcare, because we know that Democrats love healthcare, AMC Entertainment, because retailers are coming back up because of vaccination, and that's always been a strong part of our economy, entertainment, and Duke Energy Corp for the utilities, playing it safe. Um, for Duke Energy Corp, it's actually a company that works in 6 states for energy and 5 states for natural gas. It's a company that has a strong balance sheet. Assets been growing over time, retained earnings been growing over time, liabilities have been kept pretty much the same, and well, it's pretty much normal for a utility. So that's why we chose Duke Corp as one of our stocks.
Hi, I'm Rebecca Watson, and the stock that I chose was AMC Entertainment Inc. AMC is an American-owned movie theater chain located here in the United States. The symbol of this stock is AMC, and it is part of the consumer services sector of stocks. It is also part of the movie and entertainment industry. This stock currently has 216,095 shares. The last annual sales to date of this stock were 5.471, although the sales have gone down significantly due to the COVID-19 virus. The EPS is negative 34.82, which means that the stock is continuing to lose money. Due to this, it has a negative PE ratio. The beta is 2.50, which means that the stock does seem to be a fairly risky investment. Although the stock is risky, this stock was chosen because the reason that it's performing negatively is due to COVID-19. Ticket sales have been non-existent or greatly decreased since March of 2020, so movie theaters have not been performing well. Although it is not performing well, this stock does have all the makings of a good investment, and since movie trailers are being produced and vaccines are distributed, it does seem that it could be a low-cost investment that does do well in the future.
Hey y'all, my name is Kayleigh Lanpher, and I am from Group 4 for the stock simulation. So the stock that I chose is Google. The stock name for Google is GOOGL without an E, and the actual name is Alphabet Incorporated Class A. So now I'm just going to go over why we chose Google. Looking at Google's 5-year beta was actually 0.99, which over 5 years, that's amazing. And so we chose to go with it because it's just super low risk, and it also has a really high rate of return. So Google's just a really safe bet in the stock market, not only because of the actual number portion, but because Google is just constantly growing and innovating the latest technology. So they're just constantly growing and creating new things. I think we just saw like a driverless car come out, so that's pretty amazing, and we think that we will see a lot of growth and return from Google. So y'all have a great day.
Hi everyone, my name is Brittney Canning and I'm a part of Group 4 for the Principles of Investment Stock Simulation from Investopedia. I am responsible for holding the stock of Amazon So the name of the company is Amazon.com Incorporated, and the symbol for that stock is AMZN. I currently hold 50 stocks from Amazon at a price of $3,326.13 per stock, giving us a total of $166,306.50. And I currently have an account value of $1,012,721.15. The type of business Amazon is, it's American multinational technology company that focuses on e-commerce, cloud computing, and digital streaming, and also artificial intelligence. The beta for this company is 1.2, which is high in comparison to the industry's 1.0, which signifies that it's not as volatile. But Amazon has a beta of 1.2, which signifies that it's a riskier stock. But I chose Amazon because although it's a risky stock, they often have very high returns. And despite Amazon being risky, there are a few reasons why I believe that this was a good investment for our portfolio, because Amazon consistently ranks within the top 500 companies to trade in. There's a very high PE ratio. Our PE ratio is now 93.89, which is very high in comparison to the industry's average of 52.0. And Amazon also ranks second in the Fortune 500 company. I believe that Amazon is very instrumental to our portfolio and will bring consistent positive returns.
Hi, my name is Jessica Urbstavicius, and the stock I've chosen is United Health Group. Healthcare happens to be one of the most profitable industries. This is because the healthcare market plays a large part in the national GDP. United Health Group's stock symbol is UNH, and the firm's current beta is 0.74. Meaning that since the beta is less than 1, the stock is currently less volatile and has a lower risk. The price per earnings ratio is 20.93, and the earnings per share are about $16.03. We have bought 550 shares of this stock at a purchase price of about $346.19. The reason we have decided to invest into this company's stocks was due to the recent presidential election. The Democratic Party and Joe Biden are huge on healthcare. United Health Group was actually struggling to maximize its shareholders' wealth last year due to its competition from Medicare for All proposals. However, Joe Biden does not support Medicare for All, and United Health Group might actually end up being one of the best healthcare stocks for this year. It is also believed that managed care stocks will do better under Joe Biden's presidency. Also, due to the COVID-19 pandemic, the U.S. healthcare system has been challenged. Products and services for healthcare have been in a strong demand, and the nation's health is a big priority for Joe Biden as he plans to expand the Affordable Care Act. We believe as a team that it will be interesting to see how the stock trends over time. Healthcare plays a major role in society, and we believe that the stock will be proved to be a good investment.
Hi, I'm Andre Clark, and I will be talking to you about Crown Castle International and why we decided to purchase the stocks of Crown Castle International. Crown Castle International is a real estate investment trust company with more than 40,000 towers, 70,000 small cells, and 75,000 miles of fiber internet, making them the largest owner of cell phone towers in the United States. Now, their beta is 0.31, which is low, meaning they have a low risk and a low return. Their price to earning ratio is 67 years. Their earnings per share is $2.36, and their price per share is $159.26. So, due to this growth that they've been having, the reason why we decided to invest in Crown Castle is because of their recent transitions into the 5G network. The 5G network is the new generation of wireless connectivity. It is also the upgrade of LTE to 5G, and it is 20 times faster than the current networks that we have now. They've seen a lot of growth and a lot of transitions, mainly from this one agreement with Dish, letting Dish use 20,000 of their towers, which in change has given Crown Castle more and more money due to this 5G growth. Another change that has happened is new possibilities, especially with wearables, machine-to-machine communications, and newer technologies on the internet.
So those are the 6 initial stocks that we have decided to begin our portfolio with. Once again, they are United Health Group, Amazon, Google, Crown Castle International, Duke Energy, and AMC Entertainment. We will continue to watch the trends of our stocks and make decisions as we go along. We will continue to stay on a positive trend with our investment. And our team's goal is to make a return about 25% more than we started with, meaning we would like to have about $1,250,000 at the end of this. Thank you.